Hello and welcome to MasterChartsTrading.com market recap for the week ending Friday, April 10th, 2015. This week's stocks gained while bonds weakened, and this is all despite quite a disappointing jobs report from last Friday. Interest rate sensitive sectors weakened on the heels of bonds, and we'll look at XLU utilities and IYR real estate. Gold also continued its rebound, while oil also continued the rebound but stalled at resistance. And we'll also look at natural gas and a classic breakdown to a new 52-week low. And also I'll mention why I don't even try to pick bottoms. Alright, all information in these videos and on MasterChartsTrading.com is for educational and entertainment purposes only and should not be construed as a recommendation to buy, sell, or sell short any of the said securities. So let's look at the S&P 500 large cap index. So last Friday I mentioned that, in the last video I mentioned that the Good Friday, how do I call it? The futures market for the S&P 500 was open for just a brief moment, and the futures actually closed at, I believe, 2039 last Friday. But as you could see, Monday it was a really strong day, and S&P 500 actually gained. And this was my first tell, saying that possibly the market is simply shrugging off this report and will continue higher. The S&P 500 is bullish, so a bullish resolution is likely. Now this week we get a bread thrust, and you can see it happened, I believe, on Wednesday. And bread thrust happens when a majority of stocks within the index start moving up in unison, and the stock index is not yet overbought. So we're definitely not overbought and moving higher. I don't see any divergences in the advanced decline line, so the move higher is being confirmed by the underlying strengths in the market, in the number of stocks and the volume of stocks as well. As far as QQQ, the Nasdaq-100 Etf, similar picture. It was slightly underperforming in the beginning of the week, and by the end of the week it ended with a nice strong gain of I believe 2.8% or so. And similar picture, there was a breadth thrust this week as well, and similar picture. I don't see any divergences between the advanced decline line and the price of the QQQ itself. So it is possible we will challenge these highs soon. As far as our market timing indicator, or rather market timing, is concerned, right here, as early as 26th of March, our trading system did generate a preliminary sell signal, I call it. But I was waiting for a conclusive breakdown below, as I showed before, below these levels here, which never happened. And we held support here, and we bounced off and continued higher. So it looks like, as far as market timing is concerned, if anything, today was a decent day to add to positions. Similar picture with QQQ. There was a preliminary sell signal on the 26th, and today actually was not a bad day to add to the position as well. Okay, but the opposite story is unfolding in bonds. TLT Treasury 20-year plus fund So last week I mentioned that this is pretty strong sector to be in, and you can see that this SCTR, Stock Charts Technical Rank, for TLT was above 90, and it was, in other words, in the top percentage of ETFs by strength. But this week, entire week, we're just sliding down, down, down. And we closed below the 20-day exponential moving average. Well, first we closed below the 10-day simple moving average, then below the 20-day exponential moving average. And this key support around, I would say, 129 or so, if it's broken, most likely we will at least re-challenge this March lows and possibly break below and re-challenge and retest the 200-day exponential moving average as well. It is definitely under pressure. So we did cut the position. We took profits here, I believe, or was it? I don't remember exactly where we took profit. We took profits somewhere around here, and we took more profits on Thursday, just to be safe. And also we moved our stop to the break-even point as well. As far as other bond funds, so this is a diversified bond, AGG, Barclays aggregate bond fund. It contains all kinds of bonds within it. Similar picture. Looks like we're making a lower high, which is never a good sign. And a similar picture all week. We're sliding all week long. AGG is not as sensitive to interest rates, so you can see it's still above the 20-day exponential moving average, this blue line, whereas the TLT is already below it. Now, as far as market timing, TLT is still bullish, so I'm more inclined to buy the dips in this security, and that's exactly what we did on March 11th. We entered the market here, but like I showed in the previous slides, it feels like TLT is getting cold feet, and any drop below, around here, 129 or so, will cause us to exit this position as well. Now, since TLT is a bond fund and interest rates are set by bonds, I wanted to highlight a couple of sectors which were under pretty strong pressure all this week and even the weeks before that as well. So utilities, definitely an interest rate sensitive sector. So our buy point was, I believe, here on the 16th of March, and we did pretty good. We came up immediately to the 50-day exponential moving average. But look, it's very interesting. You can see 1, 2, 3, 4, 5 times we tried to retest the 50-day exponential moving average, and 5 times we basically failed. We're getting there again, and I wonder if we're going to retest the 50-day EMA again, or we're just gonna collapse down. But this is a kind of, it's weak. It's really weak, I would say. So you can look at, you can judge the weakness or strength of a fund by looking at SCTR, and you can see that SCTR for this fund is 42. Whereas, let's say, SCTR for S&P 500 is, in the 70s, in the 66. So it's significantly stronger. So let's go back to XLU, and it's just not looking as strong as I wanted it to be. Usually, I wanted to immediately close above the 50 and then continue higher, and then possibly, retest lower. But none of this happened, and yeah. Anyways, also there seems to be a bearish divergence between the advanced decline line. So this is advanced decline line and advanced decline volume line for for utilities. You can see that there was a small, it's making a lower lows, while the price of XLU is making higher lows. Which way it will resolve, it's difficult to say. I mean, we're on a breadth thrust up still, but see how it's kind of weak and just not going up as strongly. Like here, you can see it. This is ITBM, Intermediate Term Breadth Momentum Oscillator. It closed above the 10-day exponential moving average and then just popped higher immediately. And we got a nice up move. Here, we closed above the 10-day exponential moving average, and we kind of popped higher, and then we actually dropped below it again, and it's just not as strong as before. This was a nice, 20% move or so, while here we're struggling. So we went ahead and we took profits, and we actually exited XLU. There is always a future opportunity we can re-enter. And then another interest rate sensitive sector is IYR, real estate, iShares. You can see that this week it just had a bad week. You can see right there, it dropped, I believe, almost 2% right there on Thursday. And we went ahead also, excuse me, I think our buy point was, let me just go forward a little bit. So our buy point was on March 16th, according to our market timing charts. So, somewhere around here, I believe. We went ahead and we took profits, and then we closed our position at break-even point as well. SETR also weakened, you can see. It was above 90, so it was very strong, and I thought we were going to challenge this high and possibly move higher, but instead we got a shooting star right there. It's a shooting star. And then followed lower next day, which means it's a shooting star, which was confirmed, and then a nice big drop the day after. So right now, IYR is still bullish. Real estate is still bullish, so I'm more inclined to look for a re-entry opportunities on the long side. But as well, if bonds weaken anymore, I am concerned that IYR might follow suit as well. And so this is a market timing chart for IYR. We had a nice big move here. Let's see, what is it? It was around, almost 20% move from sometime from October of last year. But here we're just not getting there. We're not as strong. We were up like 2%, 2.5%, 3%, but it's just not as strong. So elsewhere, we'll look at gold, and gold rebounded from mid-March, and this rebound, I think, is still continuing. And today actually was a pretty strong day for gold. It closed above the 50-day exponential moving average, and this is a bullish candlestick. And in general, this is a kind of bullish pattern. So in all likelihood, we'll move up to at least the 200-day exponential moving average, and possibly higher. I don't know. But long term, gold is in a downtrend, and if gold comes up here and then rolls over, this for me would be just a perfect opportunity to go short. And on the next chart, I'll show, this is a market timing chart for GLD. So you can see here a nice short signal on the 27th of January. Let me go back to the previous chart. 27th of January was right here. So this would be a very nice low risk entry, and you ride it all the way down. Right now, gold is, for my taste, sufficiently overbought. So a short signal here already would be a good enough signal for me, and I would probably take it on the short side as well. Now let's look at GDX, Gold Miners Market Vectors Fund. So it's a little bit busy chart. I'll go through it slowly. Similar picture. GDX rebounded from mid-March lows, albeit you can see it's a lot more volatile than gold itself. But you know, it's short-term uptrend nevertheless, and right now it's still struggling with this resistance from the gap down in the $20 area. So I'm guessing that, you know, if gold continues higher, it will close above this resistance and possibly get up as far as the 200-day EMA and this peak from the late February as well. At which point, again, this would be just a perfect shorting opportunity for me. Also, I wanted to point out an interesting feature of this chart. So you can see here that GDX is, you know, if you're a gold bull, this will be a nice welcome sign, because this could be considered like a double bottom. But if you look at the gold miners advanced decline line and advanced decline volume lines, you can see that they're making lower lows. So this, to me, like is a bearish divergence. You know, the security itself is going up while the underlying internals for the security are actually trending lower. So again, you know, long-term bearish security coming up to resistance, or possibly I don't know where it will come up to, but it's, you know, it's getting to be overbought territory, especially if it closes around here. It will be definitely overbought. Bearish divergence. A percentage bullish percent index is in a bear territory. So, and you can see there's no new lows and new highs. No new lows and new highs were registered either. So, as I said, you know, if it comes up here, especially, it'll be just a great shorting opportunity. On the next chart, I'll show the market timing chart. As you can see, GDX is much more volatile than gold, and there were more signals here than on the gold chart itself. But it is now coming up into a good territory to be overbought, and a rollover here, preferably coupled with a rollover in gold itself, and I will definitely re-enter on the short side again. Very quickly go over West Texas Intermediate light crude oil. You know, similar picture. First of all, light crude oil is in a bear market. You can see that the 50-day EMA is below the 200-day EMA. Everything is pointing down. I mean, it's pretty obvious that the prices are dropping here. However, here in mid-March, we had what I think was a bear trap, where price closed below support and then next day gapped up and rallied. So for now, you know, it rallied pretty sharply, but it rallied to resistance. You can see there's tons of resistance here, $54, $52. There's lots of resistance here in $52. Looks like it closed above resistance, collapsed. Now it possibly found support at the 50-day EMA right there. Maybe it will continue higher. But there's some serious resistance at the $54 area. And similar to gold, if it does get up here, it will be already overbought. And, excuse me, once the signal is given, I will probably re-enter on the short side. And you can see United States Oil Fund. So on this chart, there were a couple of short signals, or rather, there was one short signal on February 10th, right there. Right there was a pretty decent short signal. We actually played it to the downside. And right now, on April 6th, USO is already in a decent overbought territory for me, and I'm simply waiting for a signal to an over, a signal to be given to go short again. It has not happened yet. So I'm guessing maybe there will be a little bit more upside for oil still. And finally, natural gas. I wanted to highlight natural gas because the other day I was writing some stuff on my post on about natural gas on Twitter, I believe, and I had a comment that saying that now is a good time to buy natural gas, and I don't know. I mean, I guess it's possible if you're trying to pick the bottom. And right here, you can see a clear breakdown from a pennant formation. So natural gas is in a downtrend. The 50-day exponential moving average is below the 200-day exponential moving average. Prices are moving from the upper left to the lower right. And this looks like a pennant formation to me. And then right there was a clear close below the pennant trend lines. And then it just followed lower and boom, collapsed even lower this week. I think it lost about 7% this week. And another 52-week low, $2.51, and it broke below this low. So there's definitely strong downward pressure on the gas prices. And this just shows a point that I try not to pick the bottoms at all. It's possible that this was a bottom, but it's not. It wasn't a bottom. The bottom will happen when prices turn around and there is significant sustained buying pressure, and this just is not happening on this chart yet. As far as market timing for UNG, a very good signal occurred back in November of last year, and then since then you could have easily booked 42% gain if you're shorting. Right now, it's definitely oversold, but not strong, and I'm not looking to play it on the upside. If it does rebound, as with my previous examples with oil and gold, I will be looking for a re-entry opportunity on the short side until proven wrong. All right, I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We have an trade alert service that's coming hopefully very soon, and there you can read our trading approach, etc. But for now, please do sign up for our mailing list, as those who are on the mailing list will receive a discounted membership once we are live. Also, we have a public charts and social page, and there you can find links to most of the charts mentioned in this video, as well as our Twitter, Facebook, YouTube, and StockTwist.com pages, links here. Also, I'm building a help section, and within it there is frequently asked questions. And if you have a question, please feel free to contact us, and we might be able to answer it. Also, there are some decent, interesting ideas about my trading philosophy there as well. Okay, thanks for listening, and have another great trading week. Bye-bye.